everybody. Last class we have discussed about past paper question 2018 in the area of profit loss statement and financial position statement. That means preparing the financial statement with the adjustment in the area, cover the area. In this MCQ questions, so we have seen MCQ question and last part 2 questions. The last question also we have discussed in last class. Today we are going to similar thing, but the year 2019 paper. In 2019 paper, in every year we can aim to achieve the marks 22-25 through this area. Today, at first we are going to discuss about the MCQ questions related to this area. Here 33 to 40 questions are given in this series. The first you are given some information about a statement, income statement, and additional information also given. Income statement. The following the information in the income statement prepared for the year ended 31st December 2018 in Dizara business state started on 1st January 2018. Here income are given, discount received, sales, expenses are given, sales commission, rent, electricity charges, bank loan interest, depreciation of distribution vehicle, and employee salary. Then purchase during the year rupees 100,000 given. The following are total assets and total liabilities in the statement of financial position prepared as at 31st December 2018 in Thisara's business. The assets are given as stock, distribution vehicle, debtors, cash balance. Liabilities are given creditors, the bank loan, accrued electricity charges as at 31st at the end of this period. This profit income statement information also given same date for the year ended 31st December 2018. The first question, the gross profit of the Dizara's business for the year ended 31st December 2018. Gross profit. The gross profit is calculated by deducting cost of sales from sales income. Where therefore gross profit equal sales minus cost of sales. Here you can extract the sales value. Here the sales income is given 160,000. Sales income is 160,000 minus cost of sales. We have to calculate it. Cost of sales. First the purchase. Current year purchase is given 100,000. Purchase 100,000. Then is there any opening stock? No one given. Closing stock, stock is given 30,000. No other information. We are going to calculate the cost of sales using the value of purchase and closing stock. No opening stock. Opening stock is not given because this business started on 1st January. Therefore, no opening stock. Second thing we are going to see, is there any purchasing expenses? No one given. Therefore, we can calculate the cost of sales using at first cost of sales calculated by deducting closing stock from purchase. Purchase minus closing stock. The purchase is given 100,000. Purchase is given 100,000. The 100,000 is a purchase minus closing stock is given in financial position statement, that is 30,000. 30,000. After deducting closing stock from sales income, will result rupees 70,000 is cost of sales. So we can calculate gross profit further by deducting, find out the cost of sales from sales income. The sales income is given 160,000 minus cost of sales is 70,000. Therefore, rupees 90,000 is called gross profit. We will check the answer. 60, 70, 90. Yes. Answer number 3 is most appropriate one. Next thing, select the answer that indicates a distribution expenses and financial expenses in the income statement prepared for the year ended 31st December 2018 of Zara's business respectively. The first is distribution expenses. Sales commission, first answer, sales commission, that is distribution expenses, that's right. But the next thing, rent, it is administrative expenses, not financial one. Second thing, firstly given bank loan interest is financial expenses, so therefore it's not incorrect. This is not correct. Third thing, communication, sales commission and bank loan interest. Third one, sales commission and bank loan interest. Sales commission and bank loan interest. Third answer. That's right, because the sales commission is distribution expenses, bank loan interest is financial expenses. Therefore, the answer number 3 is the correct answer for this question. Next thing, question number 35. The total of establishment and administration expenses. So the administration expenses is called as establishment and administration expenses indicated in the income statement prepared for the year ended 31st December 2018. Therefore, we will see the administration expenses. Is the administration expenses here. No one adjustments. The first we are going to check in the expenses category. Here sales commission is a distribution expenses, rent is administration expenses. Under this, first thing, rent payment. Rent is rupees 12,000. Electricity charges also administration. Electricity charges 8,500. This is also administration expenses. Bank loan interest is a financial expenses. Depreciation for distribution vehicle also or distribution expenses. Employee salary is a administration. Employee salary is administration. Salary rupees 18,000. We will see, is there any other expenses? No one given. Therefore, total expenses is 38,500 is administration expenses. Now we are going to check 38,500 in your given answer. Yes, now question, answer number 3 is the 38,500. It is establishment and administration expenses for the year ended 31st December 2018. Question number 16. Electricity charges paid during this year 31st December 2018 of the Zara businesses. Electricity charges paid. That's mean cash payment. Cash payment. Electricity expenses, electricity charges is given. Annual expenses is 8,500. Expenses 8,500. Electricity expenses 8,500. This is called annual expenses because it's income statement. No? Income statement is prepared based on accrued basis. Therefore, the 8,500 is annual expenses. But then given the liability, under the liability, accrued electricity charge 1,500. Accrued electricity is 1,500. It means it's obligation. It's to be paid in future. It's to be paid, not paid as cash. It's not paid as cash. It's to be paid. Therefore, it is considered as current year-end accrued expense as liable. Total expenses 8,500. Accrued electricity is 1,500. Therefore, we can calculate easily cash payment. What is the cash payment? 7,000 is a payment paid by electricity payment. Electricity payment as cash. Payment as cash rupees 7,000. That means the income statement shows the annual electricity expenses, that is 8,500. The financial position statement shows the accrued electricity expense under the liable. It is current liable. It is to be paid. It is to be paid, not paid. That means still outstanding. Therefore, it's not paid. But total expenses 8,500. The still outstanding 1,500. By deducting outstanding 1,500 is called electricity payment made by cash. That is 7,000. It's asked in question number. It's asked in question number 36. Is there answer? Just say 7,000. Is second answer. Second is a question. Answer second is the right one. Question number 37. The net profit of the year ended 31st December 2018. These are our businesses. The net profit is calculated by deducting incurred expenses for a specific period. Incurred expenses for a specific period from earned income in same period. Earned income in same period. First, we are going to calculate the. We have calculated the gross profit early. Gross profit is calculated in early. That is 90,000. That is 90,000. Then we have to add other income. We have to check is there any other income. In income statement, discount received is other income 1,200. Discount received as other income. Discount received 1,200 other income. Therefore, total earned income 91,200. 91,200. This is the total income. Then we have to deduct the total expenses from this earned income. In the question number 35, we have calculated establishment administrative expenses. Therefore, we can deduct this one directly. Administration expenses 38,500. 38,500. The distribution expenses, we have to calculate it. Sales commission is distribution expenses. Therefore, distribution expenses, sales commission, that is 800. Rent is administration expenses, electricity charge administration, bank loan interest 1,300, 500, that is a financial expenses. Depreciation for distribution vehicle 6,000. 6,000. Depreciation for distribution vehicle, that is a distribution expenses, and employee salary is administration expenses. Then we will check if there is any other information. No one. Therefore, totally 6,800 is 6,800 in distribution expenses. We can fill the distribution expenses. Distribution expenses, that is the value of 6,800. 6,800. 6,800. Then finally, is there no one other expenses, but given financial expenses, there we have to calculate financial expenses. Financial expenses. Here, the bank loan interest 1,500. Only one expenses is given under this category. Bank loan interest, no one other financial expenses. Therefore, 1,500. That is financial one. Financial expenses 1,500. Altogether, total expenses 46,800. 46,800. After deducting expenses from earned income is called net profit. Net profit. Net profit. 44,400. 44,400. We'll check is the answer. Yes, question. Answer number 2 is the correct answer. 44,400 for question number 37. Question number 38. Select the answer that shows the amount of current assets and current liability of the liability of Dizara's business as of 31st December 2018. In correct order. First, we have to calculate the current assets. Second thing, current liability. Just using given financial position statement, we can calculate it. Yes. First, current assets. Current assets. Current assets. Here, under the assets, the stock is the current assets. Stock 30,000. Stocks 30,000. Second, debtor. The distribution vehicles are non-current assets. Next, debtor is a current asset 35,000. 35,000. Debtor. Third, has balance 14,500. 14,500. 14,500. This is a has in hand. Yes. Current assets total 79,500. 79,500. Then we are going to calculate the current liability. Current liability. Under the current liability, here the creditors is the current liable. Creditors, current liable, that is a 40,000. 40,000. The bank loan is non-current liable. Accrued electricity charges 1,500. Accrued electricity charges. Accrued electricity charges 1,500. Altogether 41,500 is current liable. Therefore, the current assets and current liabilities are 79,500 and 41,500 respectively. 79,500, 41,500. 71,500, 41,500. 79,500, 79,500, 41,500. Yes, 79,500, 41,500. There is the answer. The answer number 2 is the most appropriate answer for question number 38. 39, question number 39, the net value of the distribution vehicle as a 31st December 2018 of Dizara business is net value of distribution. Net value is calculated by deducting accumulated depreciation from cost value, distribution vehicle cost value. The cost of distribution vehicle, this under the assets, that is 120,000. The host is 120,000. 120,000 is a host value. Is there any depreciation or accumulated depreciation? So accumulated depreciation, the purchase, no one given the depreciation. No one given here. Depreciation for more distribution vehicle 6,000 is given. This is the accumulated depreciation because this business started on 1st January. This started on 1st January. Therefore, it is annual depreciation is considered as accumulated depreciation value. Therefore, we can deduct accumulated depreciation 6,000 from cost. Therefore, 114,000 is called net value of this asset. Net value of this assets. Therefore, 114,000. 114,000 is the answer. 114,000. Yes, answer number 2 is correct. 114,000. So distribution vehicle, net value of distribution vehicle. That's the answer for question number 39. Question number 40, last question. Question number 40. Equity of the Disara's business as of 31st December 2018. It is calculated by adding the net profit with capital. Net profit with capital. If there is any drawings, we have to deduct it from that value. First, we will check it. There is a capital. Yes. You are given assets, total assets and liabilities, but not given the equity, value of equity. Therefore, we can calculate using other way, that is equity value as 31st December. Just we can directly calculate it by deducting total liability from total assets. So no other opening capital or additional capital not given. Therefore, we can directly calculate by using the equation, that is equity minus equal assets minus liability. Assets minus liability. Assets minus liability. Total assets value. Total asset value. 30,000 stock. 30,000 stock. 120,000 distribution vehicle. 35,000 debt, cash balance 14,500. Altogether 30,000 plus 120,000 plus 35,000 plus 14,500. Yes, the total assets value rupees 199,500 minus 99,500 minus total liability value 40,000 the creditor, bank loan 50,000 plus accrued expenses 1,500. 91,500 is total liability. 91,500 is total liability. 91,500 total liability. Therefore, by deducting liability from assets is equity value, that is minus 108,000. 108,000 is the value of equity as at 31st December 2018. 108,000, yes. Answer number 2 is the correct answer for question number 40. Question number 40. Here, 8 questions are given. 8 questions are given covering this area, the preparing financial statement using adjustments. Unit 4 and 5 are covered. Then another further question also given in this area. You can check it. Question number 32. Question number 32 is given here. 32. It is also included in this area, unit 4 and 5. 4 and 5. If a coconut toffee is sold for 12 rupees, the profit margin kept by the Dusida on first is a manufacturing. It's related to manufacturing account. Therefore, it is not related to this area. Yes. Yes. Only 8 question is given in this area in MCQ type of question. Next, we are going to discuss about the question number 7. That last question. Question number 7. In this question, there are 3 parts. In the first part, A question is, what is bad debts? What is bad debts? It is bad debts means the irrecoverable debts from trade receivable due to various accepted reasons such as death of a debtor, escape from country, mental disorder, become as bankruptcy. Due to these accepted reasons, we can't collect debt from this type of debtors. Therefore, it is a irrecoverable debt. It is irrecoverable debts from trade receivable is called bad debts. What is the objectives of preparing the income statement by non-profit organization? It's the next question in the area of 6 or 2 also, part 2 also, question number 2 also, same area. Now we are going to discuss about question number part 3. You are given trial balance as of 31 December 2018. You are given trial balance and additional information also given here. We have to consider the trial balance items, then an additional information. Prepare the profit or loss statement. We are going to prepare the profit or loss statement and financial position statement. First, we are going to draw the lines for profit or loss statement and financial position statement. In left side, we can draw the profit or loss statement. Yes. Then in left side, right side, we are going to draw the lines for financial position statement. We are going to draw the financial position statement line. Then we are going to put the headings or allocations, space allocations. First, we are going to heading for each statements. The name of business, Sunga. At top of this statement, Sunka Raiders. Profit or loss statement. Profit or loss statement for the year ended 31st December 2019. Then we have to allocate the space for each entry. We have to allocate the space for each entry. It will be easy to finish everything. Therefore, at top of this statement, we have to put the sales value, sales minus cost of sales. It is heading. The cost of sales is calculated by adding opening stock plus purchases. Check it if there are any purchasing expenses. No one's purchasing expenses. Therefore, both total will be cost of goods to be sold. The cost of sales is calculated by deducting closing stock from cost of goods to be sold. Therefore, minus closing stock. After deducting this thing, we can find cost of sales. After deducting cost of sales from sales income, that is called gross profit. Then we have to add the other income, then heading other income, and deducting other expenses, 4 types of expenses from total income. The expenses are first distribution expenses, second thing administration expenses, third thing other expenses. Is there any? You can check other expenses. No one given. Therefore, no need to allocate the lines for other expenses. Due to the shortage of space, we will check it at first. No other expenses. Yes, no other expenses. So we can directly put the financial expenses. Yes, the spaces are allocated for calculating net profit using profit or loss statement. Then we are going to allocate in financial position statement. Thus name is Sankhas Traders financial position statement as at 31st December. Here assets are listed at first. These assets are listed under the following two headings. They are non-current assets and current assets. Non-current assets, first thing, current assets. It is a total of assets. Then these assets are represented by equity plus liability. First, equity, value of equity. You leave the 2 or 3 4 lines in practically, but now less lines are enough. Then non-current liable, then current liable. Yes. First we have allocated the spaces. Then we are going to follow the additional information. We have to adjust additional information at first. Additional information is stock is given That is a closing stock. Stock as at 31st December 2018. That is closing stock. The closing stock is the value of stock remain at the end of this period. It is current assets, but it is included in the value of cost of goods to be sold, because the purchase item is not sold at the time. This value of goods will be sold next period. In this period, end of this period, not sold, unsold item. Therefore, it is current asset. Therefore, we have to deduct from cost of goods to be sold. Deduct from cost of goods to be sold, rupees 22,000. We have allocated a space for closing stock, 22,000. We have to deduct it from cost of goods to be sold. Then listed under the current assets as closing stock, 22,000. 22,000. 22,000. The adjustment entry for closing stock is finished. Then we are going to see next additional information. That is, a building should be depreciated annual 20% on straight line method. Straight line method means the percentage is calculated on the cost value. Cost value is the amount will remain constant in their useful lifetime. There are 20 costs. We can calculate the 20% on cost. Building cost is given here. Building cost is given here. That is 350,000. It can be recorded under the cost column. The first column is called cost. Second, accumulated depreciation. Second thing, carrying value. In this heading, the building, the cost is 350,000. 350,000 cost value. The 20%, the depreciation, annual depreciation for building, the 20% on 350,000 is 70,000. 70,000, that is annual depreciation, treated as expenses under the administration expenses. 70,000 depreciation for building 70,000. Then it is accumulated with opening balance of provision for depreciation. Opening accumulated depreciation, that is given as 140,000. Altogether 210,000 accumulated depreciation value as at 31st December 2018. The 1st January 2018 is given as 140. This year depreciation 70. Altogether 210,000 is accumulated depreciation as at end of this day. 210,000. 10,000 is a accumulated depreciation. After deducting 210,000 from cost, 140,000. 140,000 is cost value. No one other non-current assets. Then second additional information, the building depreciation also completely done. Third thing, accrued electricity charges as at 31st December 2018 is 1,000. Accrued electricity charges rupees 1,000. That means the used electricity in the year ended 31st December 2018 still outstanding, not paid by has, still outstanding. In trial balance shows the electricity value charges 5,000. This is paid by hash. When we make the payment for this electricity, at first record in hash book as primary, then debited to electricity charges to complete the double entry. Therefore, the double entry is electricity charges account debit, hash account credit. Now, after completion of this double entry, electricity charges account is listed in trial balance. Therefore, the electricity charges rupees 5,000 listed in trial balance, so says that is made by hash. In additional information, so the 1,000 rupees accrued. This is used but still outstanding as at 31st December 2018. Therefore, the paid 5,000 or payable 1,000. Therefore, altogether received service, electricity service is 6,000. In the profit or loss statement, the expenses is shown as used electricity services. The received value of received service, that is called expenses. That is definition also same. The expenses definition for expenses is the value of received services for that period. Therefore, received service 6,000. The 5,000 is settled. 1,000 is still outstanding. Therefore, altogether the electricity charges 6,000. That is our administration expenses. Electricity 6,000. The 1,000 still outstanding. Until settlement will be made, it will listed under the current assets as accrued electricity rupees 1,000. Accrued electricity rupees 1,000. Yes, that additional information also completely done. Next thing, the one of additional information included in trial balance, that is 12% bank loan. This is also additional information mentioned as percentage into the trial balance. The 12% means annual interest rate for bank loan. Annual interest rate for bank loan. That is a 100,000. That's a non-current liable. It can be listed under non-current liable as bank loan. 12% bank loan rupees 100,000. The 12% means annual interest rate. 12% on 100,000 is 12,000. That's annual interest, bank loan interest. We can record under the financial expenses, bank loan interest rupees 12,000. Then we have to check is there any payment. Has payment in trial balance, just bank loan interest rupees 10,000 is paid as has. 10,000 is paid. Used service 12,000, paid as has 10,000. Therefore, the 2,000 is accrued bank loan interest. Is still outstanding rupees 2,000. Therefore, it is listed under the current liable, accrued bank loan interest, that is 2,000. All the additional information are correctly done. Next, we are going to follow the trial balance item. Each should be posted to relevant statement. The stock as at 1st January 30,000. That is opening stock. 30,000 is opening stock. 30,000. Purchase is 220,000. Purchase 220,000. 220,000. 220,000. Sales 300,000. Sales 300,000. Sales 300,000. Debtor value 40,000 is current assets. Under current assets, debtor 40,000. Creditor value rupees 30,000 is current liable. We can put it in first of current liable. Creditor value rupees 30,000. Discount allowed, that's the distribution expenses 2,500. discount allowed. Discount allowed 2500. 2000 is discount received, that's other income. Other income. Discount received 2000, that is other income. Electric charges is given when make adjustment. Bad debts 1500. The bad debts is also distribution expenses. Bad debts, that is 1500. 1500 bad debts. Bank loan is taken, the interest also taken. Has balance 35,000. Has balance current assets. Has 35,000. Telephone charges 2000, that is administration. Telephone 2000. Capital 124,000. Capital 124,000, that's equity. Capital 120,000, that's equity. Completely all the information are transferred to both statement. Then we have to summarize each. First, the opening stock plus purchase are called a cost of goods to be sold. Cost of goods to be sold, that is 250,000. 250,000. After deducting closing stock from cost of goods to be sold is called cost of sales, that is 22. Closing stock 22. After deducting closing stock 222. 28,000. 228,000. After deducting cost of sales from sales income is called closing stock. 300,000 is a sales value. 300,000 minus cost of sales 228, that yield 72,000. 72,000. This is called gross profit. Gross profit plus other income rupees 2,000 is called 74,000. 74,000. 4,000. It is a total income. Total income. The distribution expenses total 4,000. The 4,000, that is deducted as expenses. Then administration expenses 78,000. 78,000. Financial expenses 12,000. 12,000. Therefore, net profit transferred to capital account, that will be 74,000 minus 4,000 distribution expenses. 78,000 is a administration expenses minus 12,000 is financial expenses. That will source net loss rupees 20,000. 20,000 is net loss. 20,000. The business bear the lost 20,000 for the year ended 31st December 2018. The net losses is for transfer to equity minus net loss 20,000. After deducting 20,000 is 100,000 is capital, closing equity. Then 30,000, 33,000 is current liable. 33,000 plus 100,000 plus 100,000, 230, 233, 233,000 total. The assessed value 350 minus 210 is called 140 plus the value of assets $22,000 plus 40,000 plus 35, that is 97,000. 97,000 plus 100, 210, 40 is called 237,000. 237,000. 3. Has in hand 35, the 22,000, 2,000, $30 opening stock plus 220 is purchases, 250 minus 22, 228,000 minus 300, 72,000, 74. Distribution expenses 2.5 plus 1.5 plus 4,000. The depreciation is 70. 70 plus electricity charges 5,000 plus, I think it's 3,000, 5,000 plus 1,000, 6,000. Telephone charges rupees 2,000, 78, 74 minus 4 minus 78 minus 12. 74 minus 4 minus 78 minus 12. That is a 20,000. Yes. $10,000, 22,000 is the current assets, debtors 40,000, cash in hand 35,000, altogether 22 plus 40 plus 30. 22 plus 40 plus 35 equal 97 plus 140, 237. Here 100,000 plus 100,000 plus 33,000, 34, 33 minus 237, the 4,000 deducted 3, 4, 70, 72. Yes, that's enough. We will clarify this continuously tomorrow. Okay, thank you very much. Thank you.